Hello, I'm Victoria Fritz. Let's take a look at how markets in Europe have ended the trading session today. And sterling has hit a 4-week high. Why? Well, it's because of a combination of a couple of factors, really. First, the Bank of England voted unanimously to keep rates on hold. And also, the government lost a legal ruling that is seen as reducing the chances of a hard Brexit. Now, the US election is also in focus on the financial markets, and that's been curbing some appetite for taking on some of the riskier bets, like buying into equities, as the presidential candidates draw closer in the polls. Now, earlier on today, gold was enjoying the combination of political angst and a weaker dollar as well, and it climbed to a near 5-week high. But the profit takers, they've moved in, and the price was heading slightly lower towards the end of the session. In terms of individual stocks, the British supermarket stocks were very much in demand today. Morrison's was up around 1.1% at the end of the day after a well-received update. It's also reported rising sales now for the fourth time in a row, so an entire year. Now, the shine has rubbed off on some of its competitors as well, most notably Sainsbury's. They're up about 2.5%. Some of the mining stocks were the biggest fallers, though. The gold miner Randgold Resources dropping something like 6% after its update, and it was pulling some of its peers down with it. And the broader FTSE 100 was falling as a result of the strengthening pound. Many of the companies, of course, listed on the FTSE 100 make a fair chunk of their sales abroad in dollars and in euros. So when the pound rises, those dollar and euro sales are less valuable. Let's talk through some of the numbers with Laith Khalaf, who's a senior analyst at Hargreaves Lansdown. Laith, let's start with the pound. What is more important in terms of determining the value of the pound at the moment? Is it politics or is it policy?
I think it's a bit of both. I think today it's probably more politics. I think the High Court ruling this morning basically increases the chances of a soft Brexit, and as we know, markets think that is better for trade, better for the economy and better for the pound. Inevitably, policy does come into it as well. If the Bank of England had moved today, then we would have seen a consequent movement in the pound on the back of that as well. But the reality is no one was really expecting a move in interest rates today, and the Bank of England delivered.
Let's talk about the Bank of England inflation report that came out today. What for you stood out as sort of, the key message coming out from the bank today?
OK, well, I mean, we got a revision up in terms of the growth forecast for next year, which is on the face of it positive news. We got a revision up in terms of the inflation forecast as well, now expecting inflation of 2.7% next year and 2.7% the year after. So that's not great news for consumers because it means less money in their pocket. Also not great news for savers who obviously have very low interest rates, and now inflation is going to be biting even more into those very low rates, and actually meaning that their cash in the bank is probably going backwards in terms of its spending power. But looking at the bigger picture, I think the thing to take on board here is that the economic forecasts that we're seeing at the moment are not really worth the paper that they're written on, because they're being so revised so often. And if you look at the next inflation report, which is coming out from the bank in February, if you think before then, what we'll have probably the Supreme Court ruling on whether the Brexit process needs to be ratified by Parliament. We'll have a new US president, and we'll also probably have an interest rate rise in the US. So it's really difficult to make these forecasts at the moment. So I wouldn't count your chickens before they're hatched.
Good advice. Let's talk about what's going on with gold and Randgold Resources, which takes the stuff out of the ground. It's actually had a really tricky first half of the year, but profits are surging. So why on earth were the shares down 6%?
I think it's because they missed expectations on the market. It's always about what's baked into the price because of expectations. We've also seen the pound rise today, and obviously gold being priced in dollars suffers as a result of that. I think, again, if you look at the longer term picture, gold's been on an awfully good run so far this year. It came into the year about $1,100 an ounce. It's now $1,300, and gold profits from uncertainty. We've got that in spades at the moment in the world economy. I think the one blot on the landscape for gold is that potential for interest rate rises in the US, because at the moment cash is yielding next to nothing, and so gold, because it yields next to nothing, is pretty much on a par. Once cash starts to yield a little bit of interest, then gold doesn't look half as attractive by comparison.
Laith, we're going to leave it there. Thank you very much. As Laith was saying, uncertainty in spades, and that's very much affecting what's going on in the US at the moment. That mounting uncertainty about the outcome of next week's presidential election is well founded, of course, given the recent moves in opinion polls and prediction markets as well. For most investors, that means something called risk off, which is selling riskier assets and buying ones that are deemed a bit safer. Now, Wall Street is also digesting some disappointing data that suggests that economic growth in America, as the world's biggest economy, is likely to slow over the rest of the year. That's it from me. Plenty more coming up a little later on. We'll see you soon.
Thanks, Victoria. Thank you.